Here's a topic that I assume will be of much interest to a lot of our viewers. When it comes to diversification in individual types of mutual funds, balanced funds is one that really seems to be marketed at the top there. But you've got a very detailed analysis and insight as to why balanced funds don't make sense. Can you just walk us through that explanation supported by some of, the data that you've collated?
See, I think, like you rightly pointed out, the balanced funds have seen a lot of traction. The assets which it has garnered over the last 1 year is phenomenal. It has moved its 56,000 crore corpus approximately to almost 1.25 lakh. So there is a lot of traction and a trending kind of an investment venue, which is balanced fund. Now coming to the fact that whether it makes perfect sense to invest in balanced fund, I think from a perspective of 2-3 important criteria, it is evident that a balanced fund would not be a wonderful idea for a long-term investor. Point one is that if you chose the best debt schemes and best equity schemes in the same category or the same fund house, your outperformance over a balanced fund is going to be at least 2 to 3%. Point two, when you take a balanced fund, the debt portion ideally is not managed as efficiently and dynamically as much as a dynamic bond fund, which is a counterpart which you would want to put your money in. Point number three is when you are investing more than 2,000-3,000 rupees, as small as that in a month, you should be ideally taking one debt scheme and two equity schemes, which will certainly be a better combination than just choosing a balanced fund.
Right. Feroze, just to elaborate on that a little more, the reason I want you to do that is because especially in the current market environment, we see, like Avan was saying, balanced funds being marketed a lot and a lot of investors opting for balanced funds in the portfolio. And also the fund performance as far as this category is concerned hasn't been too bad either. So what else should an investor really keep in mind while allocating their portfolio? You're saying that one should just keep your equity and debt mutual funds completely separate?
Correct. Of course, like you rightly pointed out, Avni, the performances have been good over the last year and a half or two in balanced fund, which is exactly why there's so much buying interest today, is largely because of the equity markets having done very well. Almost 60 to 70% of the money of a balanced fund is in equity. That's why you see such stupendous performances. But actually an investor should keep in mind that the risks associated with the balanced fund are not as low as your advisor might be saying, because during times of a market fall, they fall as much as a large cap or a mid cap fund, because they take high beta stocks in their portfolio. So point, Avni, the performance has been phenomenal. That's largely attributed to the wonderful equity rally which we have had in this calendar year, starting from 7,900 this year beginning, and where we are at 10,300 levels today. So it's important to keep in mind that any kind of correction will have a large impact on the fund value of a balanced fund, but most investors seek it to be a lower risk investment, which actually is a myth.
Okay, thanks very much for giving us the rationale as to